What is going on, YouTube Nation? This is Darth Dividend, and if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. My bad, I didn't have this mic plugged in when I posted a video on the Christmas video with three high yield rates to buy. Let me know if that still sounds scratchy or there's some interference, because again, I totally apologize. It sounded like when I posted my videos in the beginning, they were real scratchy, and people are, change your volume, change your volume. I can't hear anything. I think I got my settings back and fixed it, but let me know if there's any issues. But this monthly dividend stock, a lot of people told me to post a video on and do a review on. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. I'll be at work for my 12-hour shift, but I wanted to post this for you guys to check out. I want to see what you guys think of this monthly dividend stock. So again, if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Let's check this stock out right now. That stock has a symbol ARR. It's ARMOUR Residential REIT. It's sitting at $9.84. Previous close was $9.71. Its day range was $9.68 to $9.88. Year range was $9.02 to $12.56. Market cap is $882.54 million US dollars. Volume is 2.23 million. PE ratio is 5.92. Dividend yield is 12.20%. So that is a high yield. We need to look into these guys and see what they're about. So let's check out this residential real estate investment trust. So ARMOUR seeks to create shareholder value through thoughtful investment and risk management that produces current yield and superior risk-adjusted returns over the long term. Our focus on residential real estate finance supports home ownership for a broad and diverse spectrum of Americans by bringing private capital to the mortgage markets. So this appears to look like a mortgage real estate investment trust or an mreit. ARMOUR Residential REIT, ARR is a symbol, is a Maryland corporation incorporated in 2008. ARMOUR and its subsidiaries are managed by ARMOUR Capital Management, an investment advisor registered with the SEC. We invest exclusively in residential mortgage-backed securities issued or guaranteed by the U.S. government-sponsored entities such as the Federal National Mortgage Association, the Federal Home Loan Program, or guaranteed by the Government National Mortgage Administration. Our agency securities consist primarily of fixed rate loans. The remaining are either backed by hybrid adjustable or adjustable rate loans. From the time we may also invest in interest only securities, U.S. Treasury securities, and money market instruments. So this is very interesting. Since inception, ARR has paid out $1.7 billion in dividends through November 2021. Price change and percent change. Okay, there's a 20-minute delay, but how are they doing overall as a stock? Let's see how their price per share is. Let's see how they have done revenue-wise, because you got to be careful with mortgage-backed real estate investment trust or mreits. You got to be extremely careful because these could be yield traps. So it is a high yield dividend stock. Let's look a little bit more into these guys. So right here at one point, they were at $79.20, and they took a huge nosedive. So they have just been going down and down and down, and they're dropping. It looks like somebody's like skiing and they're going down a slope, or snowboarding. They're significantly going down. Since the max, they're minus 6.288. They've been down 86.47%. They were founded in 2008. You can blame a little bit of the recession, but really, in the long run, they've taken a huge dip, and that is extremely unattractive right now. So ARR is a symbol. The dip is there, but maybe they were just overvalued in the beginning and people realized they weren't too hot. Now, again, a mortgage-backed REIT with a low PE ratio. I know you let FFO is the most important thing to look at, but if you have a low PE ratio, that also is a red flag to me for a real estate investment trust. And a lot of people who have written articles also say the same thing. Let's check out their revenue. So this is in millions of US dollars. 2014, it was 450.92. 2015, 365. 2016, 263. 2017, 254. 2018, 283. 2019, 439. 2020, 169. You can play the pandemic card. But look at these trends right here. This isn't even when the pandemic happened. So these numbers have gone down significantly. And that is a red flag to me. The revenue has decreased. I like real estate investment trusts that are in demand. So ARMOUR Residential REIT is a mortgage-backed REIT. I've done numerous videos on Arbor Realty Trust with the price per share and showing how they've done over time. Their revenue has increased and their dividend has increased. But these guys, ARMOUR Residential REIT, there's a few things that need to be looked at and some things that bring really big red flags to these guys, especially with their dividend, which I'll reveal to you. Right here, they were a monthly dividend stock in 2015. They had 33 cents. Then they hit 27 cents, then 22. It went down to 19. They've been pretty stagnant at 19. It went down to 17. Pandemic hit, they hit 9 cents. They're sitting at 10 cents. Now, you can complain about the pandemic. Sure, that's something that raises concern, why they decrease the dividend. That can happen. You can play the pandemic card. They're 12.36% dividend yield, a PE ratio of 5.96, an annual dividend of $1.20. So they are cheap right now. But the things that raise concern is their decrease in dividend over time and their decrease in price per share. Now, kudos if you bought the dip. Those guys have a significant, they had a significant dip, but I don't like the way that these dividends have decreased over time, especially once the recession was over. And they're just dropping even more and dropping even more and dropping even more and dropping even more. And it just doesn't look attractive. Maybe it'll get back to where it was, but my gosh, I mean, this dip is ugly. You're losing money in the long run. It looks really attractive because it's a dividend yield of 12.36. But in the long run, I like dividend stocks that increase over time. I like Realty Income. Realty Income increases its dividend over time. This one is just stagnant and it has decreased its dividend over time, which doesn't make it an attractive dividend stock. So let me know what you think of this video. Let me know if it still sounds scratchy compared to yesterday. This is a monthly dividend stock on ARMOUR Residential REIT. I find this very aggressive with a lot of dividend investors. They're very aggressive with buying this dividend stock. Make sure you smash the like button. And I'm going to try to post a video on the 27th. And again, I apologize with the scratchiness on Christmas Day. I think Santa is going to give me a lump of coal after that for next year because I tried to make a video to say, these dividend stocks make Santa jealous. I think he's laughing at me because I didn't have it plugged in and it unplugged. So what are you going to do? You guys take care and have a good one and be safe out there.